Joining us now for more on the latest earnings and market action, Sarat, Sethi, managing partner at DCLA and a CNBC contributor. Has anything changed your worldview with what we've seen in the first 2 or 3 weeks of the reports?
Well, I think it's interesting when you look at companies and you talked about, Alphabet saying, hey, we're going to spend more money, so then they get penalized. And if anyone says our next couple quarters is a little bit uncertain, you're going to see your stock sell off. So you see that with Meta. So unless you say, hey, we're going to make our earnings for the next couple of quarters right now, it's sell first, ask questions later. And honestly, when you have a 10-year at 5%, there are other options. So the short-term kind of trade is, if I don't think the stock's going to do well for the next couple of quarters, let's move out. Now, that's not what we're doing, but I think you see a lot of retail doing that, and you're seeing algos do that.
Do you believe companies that say, yeah, everything's great for the next couple of quarters, or seems like there's so much uncertainty right now? Yeah. Like, you're sticking your neck out if you're telling me everything's great.
You really are. So it's kind of the, hey, if we think, we're going to make our expectations for a year or two, it's much better than saying we're going to stick by the next quarter. But right now, the market's saying we have other alternatives. So if we don't like what you're doing, especially with the Magnificent Seven, I think they were put up on such a pedestal that it's going to be very hard for them to maintain these multiples. And then you're seeing that kind of spread through the market as well.
I don't know when headline issues are the most important thing for the stock market, but when you say uncertainty, are we still talking about the Fed and interest rates, or are we talking about this world we're living in?
Well, right? I think it's a combination.
And they can influence each other. I guess the wars can influence the Fed and the economy.
It's multiple now. Now it's not just one, and the uncertainty there. And then it rolls over into the price of oil.
Too.
And then it rolls over into our interest rates. And the uncertainty on the interest rates was already causing volatility in the market because we just don't know. Are we higher for longer, or are we going higher too? And if you get strong prints in GDP and all the inputs for inflation, you've really got to fed that stock. So in that sense, multiples have to come down, valuations have to come down. And in the short term, the interesting part for this, Joe, is you can find good companies here, but you just have to be patient if you're either holding them or you actually want to go buy them. So,
but you would say that there really haven't been, with big tech, any major disappointments in the last 3 months. It's mostly concern about the next 6 months.
It really is. It's concern about the next 3 to 6 months in terms of where earnings are going to go, where is cash flow going to go. And then you have an election season coming too, so you've got that uncertainty as well. I think once we get some clarity on interest rates, and I think the market will adjust pretty quickly, and you'll see M&A activity also. Every bank has talked about one of the reasons we can't do anything is because people just can't get their arms around where capital markets are.
Kind of weird that when there was no Speaker of the House, it was possible we were going to run into shutting the government and not having the funding again. Now we got one, and did no one really believe it, or it doesn't matter, or?
Nobody believes it, but I think you kind of had to have one because we're going to be spending all this money, giving all the money up for defense as well.
For defense, but it really, I never saw a blip either way in stocks or bonds.
No, and I think the market's starting to live with that. So once you kind of know that's expected, it's the other stuff.
Right. Are we going to fall off? Is this last print here in GDP? Could we be a half or a third of what we print now in the next quarter?
I think so.
I
think we're peaking in terms of economic activity, but we're not peaking in terms of inflationary activity. I think wages are still going up. You just saw today Ford. That's going to flow through to GM. It's going to flow through to the others.
It's got to flow through to. It can't just be the big three or a couple of companies or union. Unions can't call the shots overall in wage, but there is wage pressure across the board.
There is wage pressure, and you've seen it in the autos. You've seen it in the airlines. You saw it in UPS. So I think that's going to be consistent. The thing to watch for is not the GDP growth. It's really the input growth of where are commodities going to be, where are we going to get higher inflation costs, and what's sustainable versus what's short term.